Hey everyone, welcome back to the channel. Today, we're diving into the world of economics, specifically the recent inflation data from the U.S. that has everyone talking. So, grab your coffee, sit tight, and let's unravel this economic puzzle together. So, let's start with the numbers. According to the latest report from the Labor Department, U.S. consumer prices rose by 3% year over year in January. Now that's a bit higher than what economists were expecting. They thought we'd see a steady pace of 2.9% from December. But surprise, inflation is still hanging around like that one friend who overstays their welcome at a party. Now here's where it gets interesting. The Federal Reserve, led by Jerome Powell, has been hinting at a cautious approach towards interest rate cuts. Why? Because inflation is still above their target of 2%. So, could this mean that the Fed might hold off on reducing rates for a while longer? And what does this mean for the average American? Higher borrowing costs. A tighter budget. It's a bit of a conundrum, isn't it? And let's not forget the core inflation measure, which excludes food and energy prices. That jumped to 3.3% year over year. So, what's driving these prices up? Is it just the pandemic hangover, or are there deeper issues at play? Could the ongoing tariff policies from the Trump administration be playing a role? Some economists are saying yes, and that's raising eyebrows across the board. Now here's a thought: if tariffs are indeed contributing to inflation, how do we balance the need for economic protectionism with the risk of rising prices? It's a tricky balance, and one that policymakers are grappling with. Are we sacrificing consumer purchasing power for the sake of domestic industries? Interestingly, a recent survey from the University of Michigan found that households expect inflation to rise to 4.3% over the next year. That's the highest expectation we've seen since November 2023, and over the next 5 years. A projected 3.3%. This is a trend that could impact consumer behavior significantly. Are people going to start spending less, hoarding cash in anticipation of rising prices? So, as we look ahead, the big question remains: how will the Fed navigate these turbulent waters? Will they stick to their guns on interest rates, or will they pivot in response to rising inflation expectations? Only time will tell, but one thing's for sure: the economic landscape is anything but boring right now. Thanks for tuning in, everyone. If you found this video insightful, don't forget to like, subscribe, and hit that notification bell for more economic updates. And let me know in the comments, how do you feel about the current inflation trends? Are you worried, or do you think it's just a temporary blip? Until next time, stay informed and stay curious.